Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. The market's recent rise started in August from the support of the slowly rising long moving average, currently 482.25, and the 50% absolute Fibonacci line of 445.5. This move higher did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat neckline, currently at 477.5. 13 weeks ago, prices broke higher over this neckline and the last of the moving averages, and reaching both the primary and secondary topside targets for the reverse head and shoulders pattern soon after. In the process, the market created a mid-August based expanding wedge pattern that soon morphed into a bull channel and saw prices run up within this pattern until mid-November, where they peaked at the March 23 high of 540.75. The turn lower was quite dramatic, with a gapping move lower and a drop to finally be halted 3 weeks ago by the rising medium moving average, currently at 491.5. Since then, we've seen prices rise and for a short while get a little stuck in the congestion between 513.75 to 519.5 that originates from September 2012. Interestingly, this congestion seems in recent days to be better at slowing rising prices than actually slowing declining prices. We'll see. However, this week prices moved higher over the July 23 high of 526.5, and importantly still hugging that dark blue middle time, which is currently at 529.5. From that prospective dark blue mid-September to late November bullish Andrews pitchfork I drew 3 weeks ago. So this pitchfork is working fine so far, but it is acute and I would finesse it into a shallow bullish shift pitchfork or even retire it completely if I thought it appropriate. Overhead we now have the March 23 high, which capped prices in November at 540.5. Beyond that, Fibonacci based congestion of 548.5 to 550.75. All this raises the question as to whether the action over mid-September, especially since mid-November, is a double top formation or a bullish halfway hesitation. Watch this space. Winnipeg canola. 10 weeks ago I said, and I quote, "The activity over late July to date has also created a quite lopsided double bottom pattern, and last week we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60, end of quote." Well, since then we've seen the primary topside targets reached for this pattern, but in the process of heading higher, the market also created another pattern, a reverse head and shoulders pattern between late July to late October. 5 weeks ago I said about this pattern, I quote, "It is waiting in the wings should the neckline be broken, properly broken, at which time I will lay out fresh targets to this new, currently potential reverse head and shoulders pattern," end of quote. Now we tested the neckline currently at 673.20 since late October all the way through to 4 weeks ago, when the patience with those who saw this market and were waiting for a break higher finally dried up. The market turned and broke down through the key long moving average, currently at 629.90, triggering a big move lower all the way down to the lows 2 weeks ago of February and August between 571.90 to 575, with the ultimate outcome of a monthly key reversal down for November. That's what earlier had looked like a head and shoulders bullish reversal pattern seems to have become a head and shoulders continuation pattern. But that was only until 2 weeks ago when prices halted, just ahead of the congestion we saw in February, August and September, and back in November and December 2020, at 575 even, 571.80, and the December 2020 low of 567. We then formed a small base and prices have headed higher since, back up over all the moving averages, the long moving average, currently 629.90, entwined with the 2021 low at 629.5. and the short medium moving average just below those, currently at 628 even. All these are once again supports. Overhead we have the dark blue middle time, currently at 643.20 of the newly drawn 2 weeks ago mid-September to end of November bullish Andrews pitchfork. Plus, all that congestion previously mentioned formed whilst trying to break higher from the August to October reverse head and shoulders pattern between roughly 640 to 665. Thus right now we are left with no follow-on lower right now to the monthly key reversal down seen in November here, and a significant recovery higher that will soon be running up into some potentially chunky looking resistances. watch this space. Bursa Malaysia crude palm oil. This is actually quite a long commentary. I said 9 weeks ago here, and I quote, of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April, end of quote. Okay, so the first of these patterns was the broken upper time, currently at 36.66, the old August to November 2022 bearish shift pitch. I know that this is way down below the current market, but the upper time had acted in the past as a declining support throughout late spring and summer, so I keep such a thing in the back of my mind, just in case. The second pattern is the neckline, currently at 43.34 of the September to November 2023 reverse head and shoulders pattern. This is also another old pattern and one way down below the market, not as far as the previous one, but it is important. Finally, I'd also possibly add the neckline, currently at 44.07 of the September 2015 to November 2017 head and shoulders top. So I'm really not sure about this one. This also is an old one, a super old one, that is way below the current market, but it is significant, as are all 3 of these. Anyway, in early October, the market broke up over the lower September to November 2023 reverse head and shoulders neckline, became somewhat capped by that next neckline above, one from September 2015 to November 2017 head and shoulders top. This bracketing of the market between these 2 necklines happened throughout most of October. It eventually led to a mid-September, early November bullish halfway hesitation, which saw its topside targets reached 6 weeks ago. Prices next started testing a pair of 50% Fibonacci lines overhead, one from the July 2019 to March 22 move at 49.64, and one from the May 2020 to March 22 move at 49.92. And 6 weeks ago, indeed late 6 weeks ago, the market seemingly broke free on the top side from both of these. Prices pushed up over one of the June 2022 highs of 51.17 but failed to sustain the move. The next resistance being a changeover gap between 53.20 to 54.18, also from June 2022, and then the big 50% Fibonacci line of the January 21 to March 22 move at 56.06, quite a way up. So the prices pulled back down to that pair of 50% Fibonacci lines at 49.64 and 49.92, hesitating for a bit before dropping down and filling in the October to November changeover gaps at 47.43 to 47.90. That was all the market managed to do on the downside, as prices then recovered higher, making a new high close last week, one not seen since June, and fondling that previously mentioned topside changeover gap on continuation charts between 53.20 and 54.18. However, that changeover gap was too much for the market, and we've since dropped down below the June 22 congestion at 51.17 and below the pair of 50% Fibonacci lines at 49.92 and 49.64. These moves both up and down in recent weeks had given me the opportunity 2 weeks ago to draw a mid-October to mid-November bullish shift pitch highlighted in dark blue on my daily chart. Right now, prices are challenging, really challenging, the lower time, currently at 49.87, enough that we have had a breach below the lower time. It is not a breakdown, not yet. But it is a significant one to call into the existence of this whole dark blue bullish pitchfork. As I said 2 weeks ago, and I quote, "I am not in love with this pitchfork and I would retire it completely if I thought it appropriate. However, I wanted to make sure you were aware of all the actions and opportunities," end of quote. So you see, if I do retire this bullish pitchfork, there is no immediate fallback pattern to look at directly, other than to consider that perhaps, just perhaps, the action since mid-October might be either a possible double top-in formation or a bullish halfway hesitation. The answer does not present itself on either just yet, but keep watching closely. It is this juncture that I would like to raise a big point, a point I've been stressing now for 41 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now?" Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 22 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 4408 area and then what pattern prices do at that level. End of quote. 5 weeks ago I started analysing longer term patterns to ascertain what the opportunity might be. Here's what I said back then, and I quote, "Now, please note we have only had a single month's close over 4408, and that was for October this year. What I'm talking about is a very long-term pattern. Ideally, I'd like another consecutive month, but, and it is a very hesitant but on my part, but I will try now to give a preliminary idea for what we may have as an initial opportunity topside, only should we have confirmation of the move above 4408. Okay, so what am I talking about? We'll be up in the high, we'll be above the high on my daily chart, way up in the 5600 area. This would tie in with the really big and important 50% Fibonacci line of the January 2021 to March 22 move at 5606. End of quote. Well, since then we have seen a second consecutive monthly close in November up over 4408. This is not the ideal, but is the minimum necessary to start and look at these higher levels. Caution, just keep your eye on it, but this is the minimum that's needed.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.